Hi, guys. Good morning. Happy Tuesday. Welcome to Blockchain Banter Trading Crypto. I'm Jen. I'm here with Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst, and Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you, guys. I always enjoy these calls. Nice to see you both.
It's always a good time. It's always an insightful call.
It is always an insightful call. And it's always nice too, because I see so much noise on my feed all the time. So to actually get on a call and be able to discuss these things with you guys really is so valuable. And to be able to have like a platform to do it on for others to listen in and participate in the conversation, I always enjoy. Which, by the way, to all of our viewers, if you have any comments that you want to add, please add them, because I can bring them up here and Keith and Mark can give their takes on them as well. I saw two things, and I'm really just curious if it matters to either of you. You know, one being the ETFs and the other being GameStop. You know, GameStop has, I mean, I guess since GameStop and, you know, this whole thing happened years ago, the conversation never really died, and then it picked back up when somebody reappeared on X, you know. And so when I saw an announcement, it was, let me see, I won't share my screen, but we can go back and kind of take a look. GameStop considers buying Bitcoin. They have $4.6 billion in cash, and the CEO recently posted a photo with Michael Saylor. Do you guys think, considering that sort of mainstream following that GameStop has, that this will impact Bitcoin and bring more people in? Does it matter to you guys at all? Do you think twice when you hear anything like this? And I know we're not big narratives traders, right? We are definitely more like charts and TA and things, but even still, would like to hear your thoughts.
Go ahead, Mark.
I think. Okay, well, let's consider the last couple of years when it comes to how companies have been handling their cash, right? One of the things that might be common, so like in an alternative timeline, you might hear GameStop saying that they're taking, huge exposure to the S&P 500, for example, right? That would be a relatively normal thing for a company with a lot of cash on its balance sheet to do. They could also say something like they're buying GME stock or something like that. You know, Apple has previously had, a huge buyback program for the cash that it's had on its balance sheet for Apple stock. But instead, over the last couple of years, what we've seen is like unprecedented levels of insider selling. And that's not to be conflated with insider trading, meaning, that there's something nefarious or people are trading on information that isn't available to anyone else. When I say insider selling, I just mean that taking most publicly traded companies as a collection, the overwhelming majority, especially of executives, have been selling their stock at rates that we've never seen before. We also see people like, like investment companies like Berkshire Hathaway, have been scaling out of their stock positions for a relatively long period of time, and now have, I think, the largest cash balance that they've ever had, and are taking very, very small measured steps with respect to where the market is at.
And they're taking heat for that, by the way.
They are taking heat for it. And the Warren Buffett has said that he tends to do these things kind of early, that he doesn't expect that the top is necessarily in, but that there is an extremely large capitulation coming, and he would rather sort of get out while the company is still doing well, rather than have to weather the downtrend.
Right.
And so. Okay, so coming back to GameStop, is it, if you were in their position, would you be, and you had to do something with that cash, what would you do with it? Like, it seems like every single person in the stock market has decided that they don't want to take any more exposure to that stock market, and they're actually actively reversing, getting out of those positions. It could be that they see Bitcoin now as being divergent from the stock market, which historically it hasn't. I've said this before, but Bitcoin trades very much like a tech stock. And so, in that sense, I suppose it's a little surprising the GME is taking that perspective. But, might take that perspective. But as we said on the last call, if you subscribe to the 4-year cycle theory, we still have, up until Q4, expected returns on BTC with about a 50% upside from here. And so it could be that they are going to make that, that they're considering a short-term trade, to improve their balance sheet before the end of the year.
Well, they've clearly been orange pilled by Michael Saylor.
Michael Saylor.
And that's okay, right? There has been a dynamic shift in I would say public companies holdings based on Saylor's success, right? And what he did and how he has leveraged Bitcoin relative to MicroStrategy's stock price is unprecedented, right? And it's not as straightforward as it may appear. I think I mean, he obviously found a way to navigate this that's working for him and working for his company and for his investors at the moment. But it seems like there's a lot of ways that could go wrong, right?
Also coming under the microscope a little bit with respect to how he acquires the Bitcoin, by the way.
Right.
It's not all smooth sailing.
And it's not like he has a history as being the greatest, straightest stand-up guy. He's been in trouble before. And so it's obviously working, and obviously there are a lot of companies who are adding Bitcoin to their balance sheet as a hedge. But in terms of a company like GameStop, who was the I should say the darling child of Hello Kitty, and had the benefit of huge profits because of the community that Hello Kitty rallied behind him, and the mission that they had, right?
Roaring Kitty.
Yeah, I see. What I say? Hello Kitty. I got girls. What do you want from me? I'm sorry. Yes, Roaring Kitty. That's pretty funny. But in terms of GameStop, what is GameStop doing to actually improve their business? Right? They're growing their stock price because they're investing in, or potentially investing in Bitcoin. What are they doing to actually grow the company's earnings and revenue based on what they actually do? So that's something I would consider. I'm not actively trading stocks like that right now, so it's not an issue for me. But I would ask, are you investing in that company strictly because of their
possible Bitcoin on the balance sheet?
Adding Bitcoin to their balance sheet? If it's a Bitcoin based trade, why not just invest in Bitcoin?
Yeah. Speaking of stocks and things, Mark, you mentioned earlier that, historically Bitcoin was trading like a tech stock, right?
Mm-hmm.
Has it been recently over the last, year and a half or so?
Yep.
I mean, I know we were kind of expecting that retrace and it never really came. And, all of a sudden we're at 100 something, right? Were the tech stocks trading the same way that Bitcoin was?
Yes. Yeah. The Magnificent Seven is kind of replaced FANG, I guess. But yeah, all of the stocks that you've heard about, Nvidia, Facebook, or Meta, excuse me, and so on, yeah, have pushed the stock market to all-time highs, and anyone who was paying attention to it was expecting a pullback, including, it seems, the people that were responsible for issuing those stocks, which is why they've been selling out probably at the rate that they have been. but yeah, the Bitcoin chart and the Magnificent Seven look pretty comparable.
Okay, the other thing I wanted to ask you guys about too was looking at some of the positions with the Bitcoin ETFs, right? I saw an announcement and it was, you know,
from Plan B.
I'm sorry.
Are you talking about Plan B, who recently disclosed that he's moved all of his Bitcoin positions into ETFs?
No, I'm talking about Millennium Management, who has 2.6 billion. Brevin Howard has 1.38 billion. Goldman Sachs has 1.58 billion. UAE Sovereign Fund has 436 million. When you guys see this, I know we look at the ETFs,
and now JP Morgan has some. Go
so
figure,
when we
Jamie
look
Dimon.
when we look at the ETFs and we look at the outflows and things of that sort, you know, we kind of get a feel for sentiment and what they are seeing and how they're reacting to the market. But to see these numbers, does that affect you guys at all? You know, as a trader, do you think that this has any significance or carries any weight, or is it just the overall Bitcoin ETF that you like to really take into consideration?
For me, personally, it's the fact that these ETFs have brought institutional demand and adoption. In my opinion, support the macro positive, bullish macro outlook for Bitcoin. But I do have concern of.
Can I share your screen, Keith? I see it at the bottom here. Are we looking at the ETFs?
Yes.
Yeah, may I share it? I'll bring it up.
Yeah, absolutely.
Cool. Can we zoom in a little bit?
We can.
Can I be?
I can try.
Can I be high maintenance?
Yeah.
Awesome. Thank you.
Can you be high maintenance? I'm not allowed to.
That's an easy
as a father,
yes. If I really want
as a
to,
husband and a father of 2 daughters, I cannot answer that question. I'm taking the fifth. So, yeah, I mean, my perspective is that the institutional support is bringing value. It's obviously helped drive price. It's driven demand, and that has driven price. My concern is, as I was mentioning earlier, how the great Bitcoin experiment ends, how the great ETF experiment ends. Right?
Yeah. What did you mean by that?
Is this going to, as the market matures, both crypto and TradFi's adoption of crypto, and I don't think we're done with I don't think it ends at ETFs. I think there's a possibility that traditional exchanges could start offering crypto products in the way that Robinhood is one of the few places here in America, anyways, that you can trade crypto and equities on the same platform. And I could certainly see crypto maturing and the New York Stock Exchange or the S&P adjusting to offer crypto. Who knows how far we are from that happening, or if it will ever happen? But what does this do for the end game of crypto?
What do you consider the end game of crypto?
Well, I think that it was developed for financial autonomy, right? It was developed to cut out the middleman. It was developed to give you control over your own funds. It was developed as potentially a hedge against fiat. I don't think that fiat will ever go away, and I don't think that it's I don't view it as anti-fiat. I'm all Bitcoin, and I know that there's a lot of Bitcoin maxis that are all Bitcoin and anti-fiat. But I think that where a few years ago we were concerned that sovereign nations would regulate Bitcoin out of existence for fear of their own sovereign currencies. it's clear that that's not happening right now. And so what's the hedge? Is, headlines this week are that that Elon Musk and his Doge are going to audit Fort Knox.
Nice. I
And
did see that. Yeah. Has it
and
really been 50 something years or 70 years or something since it's been audited? I mean,
well,
I don't.
according to him, but I don't, I don't know. I haven't verified that information anywhere. I could believe it's believable. Actually, it's pretty freaking unbelievable that hasn't been audited for 50 some odd years, right?
Yeah.
Or 75 actually at this point. That's nuts. But imagine if those reserves aren't there. So that's like that's what the market is speculating right now. You know, I don't know how it ends. Do we end up having less volatility? And that may be okay over time. I think we talked about this a little bit last week. As the asset class matures, maybe it is less volatile, and maybe that serves its purpose as a reserve currency, as a world reserve currency, or as at least a store of wealth. Because the volatility is a turnoff to a lot of the big institutions, right? And certainly the Warren Buffetts of the world don't like the volatility. Everybody likes upside, but nobody likes the downside that comes with
I don't want to take
the
all that other
volatility of
stuff.
Bitcoin.
Right.
What's that?
I said I don't want any of that other stuff. I'll just take the upside. Thanks.
Well, they both come with the territory. So it's a matter of whether you feel that it's a worthwhile investment. The volatility with the alts and the memes, those can be fun and profitable to trade, but you can also lose your ass. You can lose your
Even
ass
the
with
volatility. Oh God, I'm sorry.
you can also lose lose it all with Bitcoin. But in the long term, if you ask me, what do I think is still going to be standing in 10 or 20 years? Is it is it Bitcoin, or is it a meme? My money's on Bitcoin.
Yeah. Even I was going to say, even the volatility with Bitcoin, we always talk about how the volatility is healthy. You need to kind of retest these certain areas to really be able to move on and have that sort of consolidation phase, right? Is always nice too, when you can see, okay, so we're looking at that pretty much right now, no?
Yeah, we are. And we have some developments in the chart here in the past few days that I think point towards some downside. We have a death cross between the green 21-day moving average and the red 50-day. And you can see we have another imminent death cross between the green 21 and the blue 100-day. And
we
so,
talked about this last week, didn't we?
Right. Well, it was
a possibility.
Yeah, I forget exactly what we talked about last week, but I do remember it kind of developing that day after the call, where we had some breakdowns. And where we sit right now, yes, these moving averages, these death crosses are lagging indicators, but the momentum tends to carry. And so the good news is there's a fair amount of liquidity in the chart between where we sit right now and really the bottom of this range. We've tested this range several times. We've wicked through the top of it a couple of times. And so for me, I'm viewing this as a pretty hot buy zone for a couple of reasons. Number one, we've tested the top of this range here around 91.5 about a dozen times so far, and we've wicked through it a couple of times. So if we wick through it, if we stay above, we have a higher high situation. If we stayed above this wick that went down to 91.530. So if we stay above 91.5, then we have a higher high. I mean, a higher low situation, which is positive for bulls. If we break through this, I could see a scenario if we move to the weekly time frame where the 21 week moving average is right square in this zone. So I like anywhere in this zone. If we are going to get a deeper correction than that, then obviously we're moving down to the next range for me is where the trend line, and we have the 50-week moving average hovering around that space as well. What looks good, however, so the death cross doesn't look great on the daily, but the weekly moving averages look good. Everything is unwound and trending in the right direction.
I know we spoke about this once before, but since you just went from the daily to the weekly,
right?
When you're seeing two different things like this that may somewhat contradict each other, what do you mostly like? How do you weigh that? How do you balance that? And
That's
what
a great
other?
that's a great question. Think of it this way, or I like to think of it this way, I should say. Shorter time frames are merely intras of the macro time frame. Okay, so where a 4-hour chart is an intraday chart on the daily is an intra of the weekly and the monthly.
Okay.
And so if you are looking to snipe every dip that you can get, then you're grabbing these levels. If you are just looking to add to your position, looking for dips to buy, then you're setting your orders at the key levels of support that you think you're going to hold, and you're going to take those opportunities. Now, if you're into the volatility and you want to trade and scoop up every couple of points that you can get, then those opportunities are there. And the death cross, as we saw this forming, you could see it on the glide path, right? Days before it happened. So it's an indication, at that point was a good indication to short. The rejection from the 21 up here was the better indication to short. Losing it, losing it, and then the rejection, were all great indications that we were going to see a greater breakdown, which has materialized. So as we were heading into the weekend, it was, my take on it was if we can't hold support at the 100-day moving average, we're going to see more downside, and that obviously is developing now. Now, the market, impatient as it is, expects it to be a straight drop, and it's not, right? Yesterday, the market was actually, TradFi was closed, and so we saw the dip back down to the line, and then another spike back up to 96 or 97. It was just an extension of weekend whale games, in my opinion. There was nothing to really make things go up, other than I know there was news on the Argentinian deal yesterday that shook some confidence in the market. We saw a bit of a sell-off, and then we saw a rebound. I think the same president from Argentina said he was buying again. Like who fucking knows? So I don't pay so much attention at this stage. I don't pay so much attention to the intra workings as much. I have more confidence, because if I did, I'd say, oh shit, this is the beginning of the end. And it could certainly develop into that, but zooming out gives me a bit of comfort that, hey, maybe we're just going to get another flush here, and I'm going to take advantage of that flush, and I'm going to buy. And so because you never know when it's going to bounce, yesterday I would have said 95 looked good because of the fact that we have we had this block of bid liquidity here at 95, but you can see that it is eroded a little bit. You can see that some of it has actually moved down here, stepped down $500, from where it was. And so I have less confidence in this holding here. And you can see prices approaching it once again. Now, when we get into these double bottom situations, price does tend to react to that positively. And you can see we've had a series of of touches down here in this range. And so this could hold. However, based on the fact that we have this erosion here, we have a little bit, a very little bit that was moved here from this 92 level. And now you can see some from 90 did this. It looks like this little block here may have actually moved up a little bit. So the liquidity dynamics are changing, and I'm watching to see if this actually, if we get more support up in here, if this refills and replenishes, or if it erodes and we break down into this 92 range. I think that it's conceivable that 91, that 91.5 could hold, and that we, maybe we don't break into this, fully into this zone, and maybe we just come close to the top. So to try and take advantage of some opportunities without making the mistake of buying higher than I really want to, I'm letting the MTF mean reversion bot do its thing. And so I won't get as many entries, but I'll dollar cost average my way into what I'm building. I did sell a chunk of my position about a week ago, and I actually bought this dip. However, I was literally headed out the door to the Everglades with no phone or internet for 2 days right after this purchase happened. And so I didn't want to have that riding. I was on a fishing trip with my dad and my brother. I didn't want to have that looming while I was out and not able to do anything. So just to take the pressure off, I sold like immediately. In hindsight, yeah, I wish I hadn't. However, I
enjoyed your weekend though, and
I enjoyed my weekend, and I have which is more valuable than the few bucks I would have made on that. But I have a feeling I'm going to get to buy in that range again. So,
Mark, you tend to look at the weekly also, right?
Yeah, that's usually the shortest time frame that I'm looking at.
Yeah. Do you guys ever look at the monthly or no?
Absolutely.
Kind of more the daily.
No, monthly is the most common one I'm looking at.
I look at the monthly. I look at the monthlies. Certainly at the beginning and end of every month is where it comes into play for me more. As a trader, I'm trading the lower time frames more. So I look at the monthly in terms of the macro health of the trend.
That's important too. Zoom out, get the bigger picture.
Absolutely. And so I think it's important to always keep these, different time frames matter. Okay. Yeah. And so it's important to keep that in perspective. If you don't care about the intra volatility, don't look at a daily chart, right? If you're not trading it, don't make yourself crazy.
Right.
Stick with weekly and monthly candles, and you'll be fine. If you're in it for the long haul, there's no need to create that stress for yourself. But if you're a trader, then obviously you're looking at shorter time frames, and you're looking for those opportunities to present themselves as frequently as possible.
Are you looking at the same? You were talking about the 200? What were we looking at on the daily, where we saw the death cross?
Right. So I personally
looking at those same things on the weekly and the monthly, or are there different things that you're taking into consideration depending on the time frame?
I personally use the same moving averages across time frames. And it gives you some indication of, what might be developing earlier. This is an early indication of what could potentially happen if the downtrend continues. And you can see that the 50 has rolled off of its trajectory a little bit. And it looks like the 200 might be doing so as well. So we just have to see how things develop. But this is, I think when you see things like this, which can be scary, it's important to zoom out gain that perspective that says, hey, I think we're
Not
going to be
looking so
okay.
bad still. Yeah.
Right.
Mark, what
So-
about you? When you look at the weekly and the monthly, do you look at the same things, or do you take different things into consideration?
Well,
Like, I know you tend to look at like go ahead.
there's no one thing that you can look at, you know.
No, but you kind of have your favorites, right? Your go-tos.
Not necessarily. Like I'm always trying to compare it to, you know, similar features that might have developed in previous cycles around, you know, either the same time of year or, you know, during similar changes in fiscal policy. You know, like moving from quantitative tightening to quantitative easing, that kind of thing. But no, there's no one thing. In general, I do pay attention to oscillators. I think maybe too much. So, you know, I am looking for, you know, bullish and bearish reversal patterns with respect to price action in the RSI. I should probably pay more attention to confirming those indicators with, you know, the MACD and that kind of thing. But no, there's no one thing that I'm really paying attention to. I think, you know, charts are still, you know, it's a tea leaf reading exercise. But I do.
I think her original question was like, in terms of like moving averages, do you look at the same moving averages across different time frames? I think we've made clear, like, over the year that we've been doing this, that no single indicator, including ours, right,
is the all tell all.
No single indicator, no single oscillator, no single data point should you base your decisions on.
Right.
You need a range of data to consider to make an informed decision.
Mm-hmm. Yeah, 100%. Another question for you guys. We always look at the liquidity book, right? Like the order book. We like to see where the liquidity is being placed, and that kind of gives us some different insights. But what about overall liquidity? I recently saw a post, and I wanted to get your opinion on it. Somebody was not happy with market makers. You're ruining this. You're wiping out everybody's liquidity, all these liquidations. There's nobody left for you to play your games with. And I'm not saying anything about market makers, you know. I mean, everybody does what they do in this industry. I'm strictly repeating what this tweet said, but they weren't happy, and it made me kind of think about it for a minute. What does the overall liquidity look like right now? Have you guys been following this at all, Keith? I know that at one point there was something that you had shared with us, and it was liquidations.
Yeah, I used to share some liquidation maps with you, and I, you know, those
do you
are
guys
leveraged.
Look at that anymore?
But that's not the same. Liquidation maps are not the same as liquidity in the spot market.
Right.
Those are, you know, those are margin positions. Those are leveraged positions. Which, yes, it does take liquidity out of the market when people get liquidated.
Right.
But there's a distinct difference between getting liquidated and liquidity in the spot order book. And liquidity in the spot order book is simply how much money
Trading.
is in the order book, and you know, and how much money is in the market cap. And so,
and this is what we look at with the heat maps. With the
this
fire
is what
charts,
we look at. This is what we look at with fire charts is order book liquidity. And so, you know, again, you know, this is another exercise. If we zoom out, listen, if you're losing your money and you're looking for somebody to blame other than yourself, you're doing it wrong. Simple as that, right? I don't think yes, there are some bad. We know this space is ripe with bad actors, and certainly on the weekends we see lots of weekend whale games. But if you think that market makers as a whole are out targeting you, most of them are just trading the spread tick by tick for pennies, if not break even, and making money on fees. Okay, so you know, that's how those algos tend to work. In terms of has liquidity left the market and there's no traders left? I'm not buying that argument. And if you're blaming the market maker for your shortcomings, maybe you need to revisit some of your strategies. Starting with risk management.
Mark, what are your thoughts? Do you look at the overall liquidity and liquidations and things like that?
Well, if liquidations happened, it's already too late. One of the things that you're generally looking at when it comes to if you're trying to trade against the people that are highly leveraged, is you have a look at the amount of open positions and what the margin is and where the margin calls are going to be. So liquidations that have already occurred don't really help you. You can look back and incorporate that into how that might have affected the market at that particular point in time, and maybe that you can get some learning from that. But most people are paying attention to what price needs to be reached in order to cause people to be liquidated, because that gives
of course. But once liquidations occur, does that not have an effect on the actual market? I mean, I know it's too late, right? But is there not any sort of a lesson we can take from that? Otherwise, like, I mean, obviously don't get liquidated, right? Don't trade with leverage. We say that a lot.
Well, it's not necessarily don't trade with leverage, because I don't think you're ever going to stop that. But over leveraged, being over leveraged and overexposed rarely ends well. Okay, it ends great for some people sometimes, which is why they continue to do it until all is well until it doesn't end well.
Right.
So I don't trade that way, and I never have. I know that a lot of people make a lot of money, and the guys who are making the most money in this space are trading with leverage. So if you're going to do that, you need to know what you're doing and what kind of contracts you're buying before you dive in. But I think in terms of like, there's no buyers left. Come on, there's buyers.
Okay,
there's no sentiment to buy at these prices, but there's buyers.
Right.
There's always buyers. It's just a matter of where's the sentiment relative to the price.
Okay, let me rephrase this question, just because I think we might be able to get a different sort of approach from it. When the number of liquidations are increasing and that money is leaving the market, does that not have a greater effect on the market as a whole? Or
what makes you think that money is leaving the market?
It's just changing hands.
Okay, fair. So then their argument, or theirs, is really just they're mad at the way that the market is moving at the moment.
Yeah, what they're
is
mad
that
at
what we
is
could chalk
their
it up
money. Their money has left the market because
Okay.
they don't have it
Left
anymore.
their hands.
But guess what?
Right.
Somebody on the other side of that trade has their money.
Okay.
Does that make sense?
Yeah. Okay. Yeah. Okay. Fair. What else have you guys been looking at and paying attention to over the last week? I mean, I've seen a lot of the memes and things of that sort. Do you think that that's having an effect on, like, Keith? Actually, can we pull up your new chart with the Bitcoin dominance and the stables and the alts?
Sure.
How's that looking? Because I think that can come into play here. You know, how much money is being moved around, and are we seeing any sort of a trend here?
Well, yesterday I thought it was looking good because we had this divergence between, Bitcoin dominance, that's the orange one, and total 3, which is total market cap excluding Bitcoin and ETH. So basically all the alts. And at that time, Bitcoin dominance was coming down, total 3 was going up, and most importantly, USDT dominance was also coming down. And so the recipe for an alt rally, or even potentially an alt season, is for Bitcoin dominance to drop total alongside USDT dominance also dropping, while total 3 goes up. Now that changed. Yesterday it was Bitcoin dominance in the afternoon. Bitcoin dominance and total 3 dominance began to decline, while USDT dominance went up. Now, as recently as this morning, we're seeing a spike back up in Bitcoin dominance, right above this trend line, right above this, 60, 61 mark. So, looking at this on the daily, this is another reason to zoom out, right? Maybe we shake out some of that intra week or intra month volatility. Right now, and this is really as of yesterday, we're seeing things trend where Bitcoin is holding the strength. Bitcoin dominance is holding the strength. Total 3, meaning alts, are getting punished, and USDT dominance is on the rise again. And so when USDT dominance is on the rise, it means people are concerned, they're fearful. And yesterday,
Right.
with all of the BS that was going on around memes, we saw more money rotating into USDT and out of alts and out of Bitcoin. Now we're seeing some of that rotate back into Bitcoin.
Okay.
But this could,
So
this could change, and this is why we have to continue to monitor these things, because they do change daily, and nothing is definitive yet. Bitcoin dominance is still trading close enough to its trend line to revert, and as you can see, price still eroding. But the fact that it's been holding so well through all of the sell pressure, has been interesting to me.
what I really enjoy about this, and I know it was maybe 2 weeks ago when you first introduced this chart and you were asking opinions on it. I'm not sure I really realized it at the time, and I might have. I just might not have been so vocal about it. But we talk about sentiment. We talk about our X feeds, the things that we're seeing, the things that we're hearing. But when it really comes down to sentiment, this is a really great way of measuring that with the actual movements. People say one thing and do another, right? We talk about being exit liquidity, things of this sort. They want to pump your bags or pump my own bags and things like that. But when you're seeing what is actually happening versus reading what you're seeing on your feed, this is so much more telling than that is, right?
Yeah.
There's actual fact to this, I guess I can say.
A lot of what you're reading in your feed is designed to help the content creator achieve what their goals are, right?
Yeah. Mm-hmm.
and I would encourage you to look for the people who are just showing you data and charts, and rather than speculating. Benjamin Cohen had a great statement earlier today, and he said, meme coin influencers don't have alpha, they have allocations.
I saw another one of his. He's been going after meme coins hard. Mark, our DeFi discussion tomorrow is going to be about meme coins, and I have a couple of his bookmarked because I noticed, and there are some where, and if you aren't familiar with Benjamin Cohen, and we often refer to him, Mark, I know that you're a fan of his on this call, but at one point he was known as like the Bitcoin maxi, but he charts, he tells it the way that it is, what his thoughts are. He's very forthcoming with what it happens to be, but it's never been really about, I've seen Bitcoin, I've seen Ethereum, I've seen Solana, I've seen some other things. Somebody asked him to kind of dabble a little bit, and he will. But him going after meme coins, was surprising to me, at least personally, to say the least. Now, it's true though. And I've seen a couple of different posts on that. Mark, what are your thoughts? You've been quiet.
On the meme coin stuff?
In general.
The criticism that meme coins get, I think, is largely, I don't want to say it's undeserved, because a lot of these meme coins are, sort of flash in the pan type stuff. But I think it's a little bit calling the pot calling the kettle black, sort of, using that idiom, alternative phrase. the issue that I take with it is that Bitcoin has largely, defined itself and its success
Remember,
as a
we're having our
cultural
call on
mimetic.
memes tomorrow. Don't go too far into it. Don't spoil this for
Sure.
tomorrow. Okay.
Well,
Oh, come
let me
on,
this
give me
way.
some nuggets.
He said this, and it's true. Okay, Mark, you can repeat it. I could also tell him if you're going to say what you had said on the Cody call with it
Oh
was
no, I wasn't
Tracer,
gonna.
right?
I wasn't gonna
Oh,
go
well,
that deep.
Mark referred to Bitcoin as like the original ultimate meme coin.
It is
I'm
a meme coin.
rephrasing, but that
Like
is
it gets its value from culture. Like Bitcoin isn't redeemable for anything. It doesn't
Do you
store the
consider
energy
Sure
Bitcoin
that.
it
a meme
is.
coin? Okay, go ahead. I want to
Wait,
hear
what
it.
do you mean it's not redeemable for anything? You can go
Well, like
buy stuff with Bitcoin.
well, sure. Yeah, I mean, you can do that with meme coins as well. Like, I just mean that it's at the fundamental level. Like, there is no such thing as fundamental value because value doesn't really exist, right? It's a thing that society has created to try and express how much agreement there is between people desiring the same thing, right? But there's nothing underneath that. And so,
What you're saying, there's
fiat,
nothing underneath Bitcoin?
right? But there's nothing underneath anything. There's nothing underneath gold. There's nothing underneath fiat. There's nothing underneath your health. There's nothing underneath real estate.
What
It's
do you mean
all
there's
very,
nothing
very
under real
abstract.
estate?
But there is. I mean, there's fundamental value to real estate. There's fundamental value to
Well, no, but that's where I disagree. I don't believe in fundamental value.
At
I was
all?
having I was having a conversation with someone recently, and they said that basically uh, they choose to rent now, and they will forever, and they can easily afford to buy a place to live in. But basically, that they would rather have they would rather enjoy their life and sort of move around and that kind of thing, than kind of be tied down to a property, and that no one takes their house with them into the afterlife. And I'm seeing more and more of that kind of mentality now.
let
Like
me guess,
the
they
Can
don't
I
have
say
things
children.
something?
they do have children. They absolutely, yeah, they do have children.
You know what,
Um,
though? I have to say, as a homeowner, who's to say that you're not enjoying your life as a homeowner? And I think this comes down to personal preference because some like that stability. Some like to have a place to call home that is theirs. No one can
no,
come and say, hey, I've
I
decided
agree.
that I'm going to turn around and I'm going to sell my house now because the market looks good. Now you're
Yep.
struggling. You're on a time crunch. You're on somebody else's time. Now you have to go and find this place, and suddenly your rent has doubled or tripled because what you were paying is no longer market value for a place to rent. And as a
Right.
homeowner, it doesn't mean that you're not able to get up and travel. You might
Yeah.
not be able to get up and do it for 6 months at a time or something of the sort, right? But you're still able to achieve those things. There's value I mean, there's fundamental value. I think, and maybe this is where we disagree on being a homeowner versus not. And I think that value is dependent on the person, whether or not it's worth it to them.
Yeah,
You
there's
know,
and I would say, obviously the real estate carries what I would consider fundamental market value. There are from a residential perspective, um, school districts are tied to real estate zip codes. So where you live dictates where your kids go to school. You want to put them in a better school, you put them in a better zip code. You, um, I'm talking public schools. On commercial real estate, obviously, high traffic areas are more
it's an
valuable
investment.
than
Hmm.
low traffic areas. So there is fundamental value uh, to those properties. Now, listen, I'm all about the nomad life. I did it for years before my kids were school aged, and it was fantastic. I happen to be in a situation where we are looking for a house to buy, and interestingly, I've seen some houses that are like they're in great shape, but they're tiny. I'm talking like 1,000 square feet tiny, which is too small for my family. But these people have a 1,000 square foot house, but outside that house, they have a 40-foot RV parked, you know, because they're traveling and their house is just basically their home base if they come home to, you know, seasonally. You know, likely retired folks who are living the nomad life but still have a home base. And that's, listen, more power to you. I hope that someday I can get back to that as well. But to say that that there's no fundamental value in an instrument that can give you financial freedom away from banks, that can process transactions across borders in seconds versus days or weeks with a fraction of the fees. There's a fundamental value in that. Likewise, I think there's a fundamental value in projects that are actually facilitating cross-border payments and payment systems versus the myriad of shit coins that literally don't have any fundamental value. So my hope and dream for this asset class is that we do eventually mature and the garbage goes by the wayside or maybe to its own playground, and the serious projects that bring that truly bring innovation and use cases, real world use cases to bear are the ones that end up on the legitimate exchanges.
Mark?
Centralized or decentralized.
Yeah.
Yeah, sure. I mean, all valid point, but Bitcoin doesn't really innovate, right? Like, and you know, there are much faster, much cheaper chains. My point is that the fundamentals never work, and Bitcoin is actually exemplary of that fact. The point
I'm
that
sorry, what doesn't work?
The fundamental analysis of things. Like you know, it's well and good to say those things, but I wonder how well Bitcoin would fall, you know, relative to its current market price, you know, versus the fundamentals of a house. Like, do you think that Bitcoin should be worth as much as a house? You know, like, and how are you doing that measurement? Like, there is nothing that you can do to prove or to, you know, to make that comparison, because value is fiction. You know, there is nothing there that you can draw, you know, a
the value
conclusion
isn't
from.
fiction. The value is market based, right?
Well,
the value is whatever the value the market assigns to it.
Well, correct, but you know, if it change, yeah, if
So it's a consensus.
Well, sure. Well, but how much of a consensus is it when you're now trading against Saudi Arabia? You know, like, or you know, the Trump administration by way of Liberty Capital or not. Like, I don't think retail really has their hand in any of these markets to any significant extent, real estate included. You know, the points that Jen was making are totally legitimate ones, but retail is only a small proportion of the real estate market. You know, it's
I'm
mostly
not
held.
claiming to have any control over that. I might be completely helpless when it comes to the actual market itself, but there is fundamental value still in real estate. Just because
Well,
it
sure.
might be at the mercy of someone else, you know,
Let's
it's
call
the
it
same thing as our
let's call it
groceries and
objective
everything else.
value.
But I mean, there's still value to it, right? It might only be what someone's willing to pay or what somebody else
Sure.
determines it's going to be, but it doesn't take the value out of it just because you don't have control over that.
Well, sure. Like, I mean, we're getting into the semantics of it, but if I have to ask
Right.
someone the value of something is, then I'm not sure that it's there at all, right? I think that value exists in the same way that love exists, right? Or happiness exists. Like, these are things that emerge from our subjective experience of reality and aren't fundamentally there.
Do you have to ask someone what the value of Bitcoin is, or do you go into an exchange and see what the market determined it to be?
Those are the same thing.
Well,
Like,
and
we ask.
likewise, you could put your house up for sale for $1 million, but the market might only think it's worth $500,000. So you know, you're going to sit there, you're going to sit there on the market for a long time. You're going to keep lowering your prices until you find what the market is willing to pay.
It's only worth what someone's willing to pay.
Right.
Well, maybe, but maybe not. Like, for example, earlier in this call, we spoke about the audit that might be happening on Fort Knox, right? And one of the things that has been an emergent narrative over the last 6 months or so is the suppression of the gold price over the last 2 years while people repatriate their gold, right? It's these markets aren't always what we think they are. You know, the prices that we get presented, we have no way of auditing. You know, like the information that's presented to us, even on the screen right now, is by way of the people that promise cross their heart hope to die.
All of a sudden the screen went away, Keith. That was good timing. Go ahead, Mark.
But, you know, and this was meant to be one of the things that blockchains were supposed to service, right? That if I want to find an irrefutable source of truth, right, on an immutable public ledger, I can do that. But as long as we're being, given data from Binance, from Coinbase, and so on, I guarantee you, like, it's contaminated. The same way that, like, even with gold bars, which are physical assets, we're in, the Doge, the Department of Government Efficiency, led by Elon Musk, is now going to go back and audit those things. And even then, we're going to have to take him at his word that audit is being performed well and that the results of his investigation are what they are. There's no way to verify this stuff.
Why wouldn't there be a way to verify it? If it's literal gold bars sitting there, why would there not be a way to verify it? Why are we left to his word and his word alone?
Well, if he counts the gold bars and tells you what he counted, all you know is what he said he counted the gold bars to be.
Right. Okay. So this kind of goes with any piece of information you're talking about.
And
except
he already
information.
He already posted a meme. He already posted a meme that said they're gone.
Right. But but that doesn't.
Sense of humor. I don't care what you guys think of him. I think he is fantastic. Wait, Mark, I know we're over. So just one thing really quickly. You're talking about taking Binance's word for it or Coinbase's word for it or somebody's word for it, right? But these are all aggregated in a sense as well. Like right now we're looking at Binance charts and Keith says that, we're looking at the order book at Binance, right? This is what we're looking at. But when you have data reported, a lot of time, at least in DeFi, right? It's not necessarily from one source and one source alone. Or it probably shouldn't be, right? Considering there's that risk of manipulation.
It could be from one source.
Okay, it definitely could be. What I'm saying, though, is that's not exactly good practice, right?
I mean, the idiom in Bitcoin is verify, don't trust, and that's all we do. We always trust the data that we're presented, and none of these people even are under any legal obligation to give you the truth, right? Remember, crypto exchanges are completely exempt from normal regulation.
Well, not Coinbase is a publicly traded company.
Coinbase maybe not, but with respect to the fidelity of the data on their exchanges, there's very little, right? They're not held up to the best business practices and the other things that might be a legal mandate in when you're trading like commodities or something like that. These laws just simply don't apply. And so the data that we get out of these things is questionable. There's no way to verify the authenticity of it, and it is suspicious, for example, that in the same in the same millisecond that all of crypto's prices can move together at exactly the same time. It's something that people have asked me about so often. Like if it's the case that a trade is required to move the price, then how do 11 million cryptocurrencies all go down by the same percentage in the same millisecond? And the answer is very obvious. They're not. traded the way that we think that they're traded. And the data is, I think, at least partly fabricated.
Okay. We're going to pick this up next week unless Keith has a final thought. Mark, I'm considering that yours unless you have another.
No, that's okay.
Okay. Keith?
No, I'm listen, I do think that there's a serious trust issue in this market and in this industry, and it's justified. I do, I would say that things that are on the blockchain are immutable, and that's something that's an innovation and a fundamental value that Bitcoin has over what has traditionally been, basically an Excel spreadsheet in terms of how money is moving. It would be interesting to see, if the if the big publicly traded companies and federal agencies actually were required to to identify their wallets so that we could see them. Now, companies like Arkham do some forensics to figure out who owns what in some cases, but I mean, there could be a lot lurking in the shadows that nobody knows. Most people's wallets aren't exposed.
Yeah. And I don't know if it's just our industry either, right?
No, it's not. I mean,
Yeah.
is
It's not
there
like it's exclusive to us.
is there anything more corrupt than banks?
And on that note,
That's a wrap. Yeah.
thank you guys so much. Thank you to all of our
Yeah.
viewers.
Hey, maybe I
as
shouldn't have
well.
said that as I'm in the process of getting a mortgage.
Oh, it is true. Okay.
Right.
Well, hopefully your
Mortgage
bank's not
brokers are more
listening.
corrupt.
Right.
Mark's digging your hole deeper, Mark. Let him get approved for let him get his mortgage and everything first. Let's get him in the house, then we'll talk. Well, thank you guys again. Thank you to all of the viewers. I'm sorry we ran late. We will see you next Tuesday. Be sure to add any thoughts and things, and we'll revisit them next week. Thanks, guys.
Have a good one. Thank you.
You too. Thanks. See ya.
Bye.